This is the MTPredictor weekly market update for August 25th. So I'm just going to give you a quick overview of the software here and then a quick overview of the markets. We did a little more detailed analysis last week, so we'll go fairly quickly through these. But again, this is MTPredictor version 7.5, the latest build. And this connects to either the eSignal, IQ data feeds, which are third-party feeds, or your Zenfire, Rhythmic, which are your broker feeds, FXCM for Forex. And so you've got a number of data feeds there that are compatible with this software. And again, we also offer the MTPredictor add-ons for NinjaTrader 7, which works with any Ninja-compatible broker. All right, I've got scanners here to the right here. I've got the E-minis on the day chart. That's for the intraday trading. I've got my commodities that I like to look at, the Forex, the Dow 30 stocks here, and a chart for the larger time frames. And you can see here's your E-minis here, and this is how I can quickly see if there's any wave pattern. So this is where we see that the futures are the stock market futures are basically in wave 5, and we had sell signals in the S&P and the new one in the NQ there, and this is how we can go to the chart and we can observe these on the chart. But this gives us a good overview of these markets, where they are wave pattern wise, where are they in their trend, if there's any trade setups there. If we want to look at the Dow stocks, we can kind of see what wave patterns a lot of these stocks are. We've got a new buy signal in J&J. It tells me it's in a wave 4, probably heading into a wave 5. So if we want to look at that, I can just right click, go to new chart, and it pulls, and here's the trade set up here. And we can see the pattern here. If I just put the Elliott wave analysis on here, you can see it's in wave 4. There's a blue buyer's candle here. The TS2 lets us know that there's an ABC. We'll see that when we analyze the setup here, this ABC correction into wave 4, and it's looking for the wave 5 target there. So entry would be at 88.45, for example, with a stop at 87.20. That would lock in this case, this is a $100 risk with a target which is 4.4 times greater than your initial risk. So if you're risking $100, take out about $438 if you can get to the target there. So just an example how the software, once you set up the scanners, you can quickly find patterns and setups that might meet your criteria, and then the software will kind of do the rest there, give you the particulars based on your inputs and how much you want to risk per trade and the size of your account. It'll then calculate the position size for you automatically, which is one of those things that most traders forget to look at. So here's our S&P. This is actually the futures contract, the current contract on the S&P. And again, we had our sell signal here. And the reason why we're interested in this area is, again, we've gone wave 5 up. We hit the minimum wave 5 target. We were looking for that 1700 level as a target to the upside before we get a correction. We've begun to correct. The software saw we did have divergence up there as well. And so as we had a higher high in price here, we had a lower high in our oscillator. The software sees that divergence automatically, and we can put the analysis on the setup. So this target would be 5.8 times greater than whatever your risk would be. In this case, this particular account isn't large enough to trade off this weekly chart. But the we had the Fed minutes came out. The Board of Governors looks like they are in favor of tapering, but there was a horrendous new housing sales report came out at the end of the week, and the market kind of bumped up here. You can see we closed the week with a blue buyer's candle, so we had buyers overcoming sellers by the end of the week. And so we'll have to see now if this gets follow through. We may want to, since we did achieve the 100% initial risk line already, you certainly can move the stop down to 1680.25. And you're in a risk-free trade there, and either it continues to roll over. Because if it does rally here and it doesn't take out the high, you'll get an opportunity to set up a short in a potential wave 2 and we'd be looking for a bigger wave 3 move down. So if you do stop on that, that might be another opportunity if we get a setup that fails to take out the current highs. But the tricky thing here is the bad news, essentially is good news for the market, in that, if we have more reports like that horrendous new home sale report, then that's going to shelve any tapering, and the market would be looking for QE to continue in full force, in which case, if that is what transpires, then we may end up seeing new highs again. So it's kind of a tricky area here. If the tapering talk continues, then maybe this works its way down to the target down there on that 1534, 1535 area. We'll see. And basically all the stock markets are in this same basic position. So we'll definitely keep an eye here on this. And again, you can protect yourself if you're short this, in whatever form you're short. And we'll see how this plays out here. Let's look at, we can go to the euro here. Here's the euro on the weekly chart. I'll make this a little bigger here. So again, the euro, we went this wave 5 down here. We did have our correction back to the wave 4 DP. All right, this is a decision point area for the market. There was a sell signal that came in here, and we can analyze the setup and see. If you're using the 100% initial risk line, you're stopped at break even now. If you're going to continue to hold that, we'll see. Here's the next level resistance at 135 there, and if we can get if that does get into resistance there, we'll have the dollar. Here's the daily chart of the dollar, and chances are if the euro rallies in that at 135 level, we can get the dollar down to this 80 level. Then the dollar will be in support and the euro will be in resistance, and then we'll see if we get a rally in the dollar and some selling coming in the euro. The weekly bonds here. Here's the interesting, obviously bonds have been in a huge uptrend. This chart goes back to 97, I think. But you can see the long-term trend line drawn here, and then the shorter term one here. And we've currently gone wave 3 down. We hit the minimum wave 3 target. This down here would be your typical wave 3 target here. So this trend, obviously longer term trend, is still intact here. We've just pulled back. You see we've gotten these spikes. Here was your around December 2008, January 2009, with the stock market crash there, and then the stock market subsequent bottom in March of 2009, and your spikes in that September, October of 98. You had another one here in May and June of 2003, and so forth. So it pulls away from that trend line and then ultimately finds its way back. Pulls away, finds its way back. Here's the shorter term trend line that's it's been pulling back to. So we're close. If you look at this little kind of this little head with the right shoulder and left shoulder here. Here's your neckline. We broke below that. Here's the measured move. Would take us down to the bottom of the this trend line here. So just kind of another piece that we're looking at. But anyway, we see that when this market pulls away from the trend line, eventually it does come back. So we're going to see if we do find support in these areas, and then if the bonds do begin to rally, if they do begin to break down, especially if they break down the longer term trend line here, and we start closing below this level, then obviously that may be a complete change in the interest rate picture and so forth. And so that will be something to definitely be watching. But so far, we're coming into levels of support, and we anticipate that bonds could rally from these areas. We'll see. again, a lot of the Fed activity might have a lot to say about this, so something again to watch. And then silver. Silver here is coming into this wave 4, and let's just draw some lines here. Again, this was kind of the bottom of our descending triangle, which you don't typically see at market tops, but it is a bearish formation. And so we saw the breakdown. We had obviously a lot of sellers on this breakdown here, and typically after the sell-off you get a retrace back, and they kind of test the bottom of that trend line there, which would coincide with our wave 4 area, and then we'd see again typically a sell-off from there. But this is going to be interesting, since we did have a lot of speculators selling in that area, and we come up into this wave 4 area around that $25, $26 level. Do they hold off the buyers there, and we can project wave 5 down and test these lows? Or does this create a short squeeze? Since we know there's a lot of people short from that area, does it create a short squeeze, and instead maybe we rally to the next decision point level, which is going to be up around that $36 level? All right, so this should be interesting. It's had a nice move up in here, but this is going to be a critical area, I think, for silver. And if we want to look at gold here, this is the weekly chart of gold. Just see the pattern there. Potential wave 2 or B. This sell signal, you can see all the targets that it went through. The typical wave 3 target, not down to the maximum wave 3 there. So we'll see how this rallies, but I think on the daily chart, oops, there's the daily chart. Here's that last swing into the low here. So let's just take a decision point off of that, and gives us another major area of resistance about 1450. Again, we're just about getting ready to test that 1400, which is another big area. You can see that was an area, kind of a supply area, and the market fell out of there. So this should be a good area here in this 1400 level. Let's see what kind of movement we get in there. We got a little more upside in silver before we get into that wave 4 there, and then let's see what happens if things begin to roll over. This little decision point here, you can see we've gone beyond that. We've got a close above that, which points us up to the next resistance level, again 1400, and then above that we'll call it 1450. Alright, so we'll leave it there, and we'll take a look at these things, how they've progressed next week. This week should tell us a lot. Got a full slate of news before this week, before the holiday next week. I think it's Memorial Day next week. So anyway, we'll take a look at things, see how this week progresses. Keep an eye on some of those critical levels there, and protect yourself on the stock market shorts. And we'll be back to do it all again next week.